Ask, will I save thousands of dollars if I buy a home or should I rent in today's market? Many would be buyers are not informed of all the tax savings as a homeowner and that they have zero tax savings as a renter. But do these savings really save a buyer or not? We will look at an example of just that for a home listed for sale and also for rent at the current time. And what should you really do? Well, welcome back to our channel. I'm Michael Citron. I am the top one Parkland realtor and also run Parrot Realty, which is a top selling real estate company here in South Florida. If you find any value in this video at all, I only ask if you please hit the like button. If you really like the video, then please subscribe so you can be notified when we upload new content and support our channel on a weekly basis. If you would like to book a call with me, please go to the first link in the description below and you can easily book a buyer, seller, or just a discovery call. I am here for you. This week, we are going to discuss the following. One, will I save thousands of dollars if I buy or should I rent? Two, the weekly Parkland real estate market update. Three, the mortgage interest rate news. And four, we have 5 open houses this weekend in Parkland and 1 in Pembroke Pines. And then lastly, we're going to discuss our Parrot Giving Day charity event. So obviously, the example that we have right now, and this is a home that is currently for sale and for rent in South Florida. The list price for sale is $866,000, and the home is also up for rent for $5,000. So I really wanted to break it down because right now in Parkland we have about 41 homes that are single-family homes that are listed for rent. We have, right around 100 homes for sale. So the cost of buying it right now would be approximately $7,500 a month, all in, all your money, all in. The interest rate, it's fluctuated. We did this yesterday, and it actually came down. But say the rate on a jump, on a mortgage rate, putting 15% down would be 7.75%. The principal and interest would be a little under $5,400 a month, and your mortgage interest write-off for the first year would be $58,000. So that's a lot of money that you can write off, and depending on your tax bracket, you will be saving a lot of money that you can write off of that amount that you're paying for the mortgage. So you put money as a renter, there's no write-offs, and we'll get into that. The property taxes write-off, you can are allowed to write off up to $10,000 of your property taxes per year. So if you pay 10, you can write off all of it. If you pay 20, you can write off, up to 10. That's what the government allows you to. The equity over the over 3 years would be, just by paying your principal and interest, would be approximately $30,000. So you're really automatically built-in equity. Even if the market doesn't change and the house doesn't go up in value at all, you're still building equity in the property because it's your home. You're paying principal and interest, and obviously the first years of the home purchase are going to be more of interest than principal, but you still can write off all of that interest, or a large portion of it. So look at it as a renting scenario. Most renters have to provide first, last, and security. So that's at least $15,000 to just get into the property. You have your moving costs to move in, of course, but you're not building any equity into the home. You could live there 5, 10, 20 years. And if the property goes up in value at all, or you're paying down your principal, you see none of those incentives. You're basically paying off the mortgage for the landlord who is renting you the property. So you get no write-offs. You might have to renew the lease every year. The rates are going up. I mean, obviously, we see about a 4 to 5% increase in the rentals in Parkland for single family homes. So you have never know. You're at the beck and call of the owner, who could jack up the rents on you. He or she could require you to do different things, so all of these factors could change, or the HOA could require changes. So or they could ask you to move out. Maybe the owner wants to eventually sell the house, move back into it, have a family member living in its stead, and then you have to quickly find something, to move to. So these are definite factors. Now, yes, you're only putting $15,000 down, and when you're putting down 15% of the purchase price, you are significantly paying a lot more money. But there's so many different buy down programs, temporary, the 3-2-1 buy down, or the 2-1 buy down. for non-jumbo mortgages, or for the jumbos, you can get a permanent buy down, get a 30-year fixed mortgage, and have the seller contribute to some of your closing costs to get the rate in a 6 or even lower percentage points. I mean, that's what builders are doing right now. So if you take those into effect, your rate of what you're spending could even be, the same as putting the 15 to maybe 20, $30,000 down on a property right now with all of the incentives. Owning has been one of the best incentives for buyers to look at, because if you rent a place for a long period of time, you basically have no equity build up. You have no wealth building. You can't do anything. And if you live in a house for 2 years and a day, and we do see, appreciation of, consistently of 4 or 5% that we see today, and that's 5 years from now, or even a few years from now, you're going to be able to save on those capital gains tax by not having to pay it from the price you paid to what your fees are to the sales price. So we see a lot of sellers taking advantage of that, up to $500,000 right now, as home prices have gone up dramatically in the last few years. So these are incentives of why you should buy today. So if you're thinking of renting, you really need to know these numbers, because I see a lot of people just running to rent, saying, well, look, I'll buy when the rates go down. But it could take, a year, it could take 2 years. And that, in this example, you would lose tremendous amount of money, and you would be at the beck and call of what what the landlord / owner of the property would end up doing. So understand that when you're making a decision on renting, instead of buying. So buying, even with interest rates high, there's still a tremendous advantage over renting. You're basically throwing money away. You're basically paying down the principal, paying off the mortgage for the landlord that you're residing in that home of. So this week in real estate for Parkland, Florida, we've gone down in inventory. We're now at 92 single family homes for sale, and that's excluding the 55 plus communities. We've had 42 price reductions on those homes. That's almost 50%. We're at 46% that those homes have already had a price reduction. Maybe they'll have others to get people interested, to put offers, and then they'll probably be reduced in price to get them under contract. So sellers are definitely experiencing, price adjustments, either to the market, or when they're negotiating to go under contract and hopefully close. Those homes have been on the market on average of 78 days. We're starting to see this shift to a more of a middle market. Certain neighborhoods, we're seeing more of a seller's market. Certain price points in neighborhoods, we're seeing more of a buyer's market. Right now, year to date, the median sales price, we like to use the median because I think it's more of a true value of what Parkland is. We're just under 1.2 million at $1,170,000. The median price per square foot, I'm getting a lot of questions, people, what's the price per square foot? I think it's very different and unique, because I don't base home values on price per square foot, but it currently is $350 per square foot. In the past 7 days, 13 new listings, 10 price reductions, 10 homes went under contract, and 8 homes sold. I've been putting together the rental market, as it's been a very important topic. We have 41 available homes for rent right now. 23 of them have been reduced in price, 56%. It's kind of seeing a correlation of the sales and the listings and the rentals. They're almost at 50+% being reduced already in price. So renters are also able to get better deals on homes, as landlords are starting to feel the effects of the market change. 54 average days on the market, the homes that are on the market right now for rent. So we're seeing almost 2 months of time on market, and those homes haven't been off the market yet. The median rental cost this year to date is $5,900 for a Parkland house. That's $2.03 per square foot. That's a 5% increase from last year's year to date, where it was $5,600 per square foot. I'm sorry, $5,600 per rental home in Parkland. So we had 155 rentals year to date in 2023, and we only had 121 rentals year to date last year. So we've seen a 22% increase in rentals from last year. That's why I did the example of a house on the market for rent or for sale, so you could really see the differences, because obviously we've seen a dramatic increase in properties that are being rented. That's 22%. I think that'll go up even more as we get closer to at the end of November into December for the final month of the year. So mortgage interest rates news, great news. We saw the rates come pull back a little bit. We had some positive economic statistics. So 30-year fixed rate is down to 7.51%. 15-year rate is at 7.05%. So if you're looking to get a 15-year rate, maybe you get a buy down, you get that into the sixes. That could be a great rate for the future. A 30-year jumbo rate, we're under 8%, thank God, 7.87%. So the mortgage market had surged down about fourth of a percentage point due to the Fed's announcement as well as the bond market rallying. So the Fed didn't raise rates, so the market responded and the bond market rallied. However, today the job reports that are coming in could impact rates too. So we have to keep abreast of what's going on in the market in order to become informed. So understand the market's fluctuating. There's a lot of things going on in the local real estate market, national real estate market. You really need to have your pulse on the market, and your number one asset is your home. So if you're renting, if you're buying, these are factors you need to learn, because if you're going to be a long-term investor, what better investment is than your home itself? You can make it your own. It's a place to raise your family. It's shelter. We all need shelter, and this is definitely statistics that you need to know and be able to, get together with a real estate professional and a mortgage lender and maybe your financial advisor and accountant to really plan your next move. Right now, obviously, we have the holidays on our mind. People should be very cautious of what they're spending if they're going to buy something, not opening credit cards and getting crazy loans right now. So it could affect your debt to ratio incomes when you do purchase, if it's in the beginning of the first quarter of 2024 or sooner. We would love to be able to give you this knowledge. We do this on a weekly basis because I know we need to know this for our business to be experts. And I really want to be able to help our clients. Our team knows all these numbers. So when you work with a Parrot Realty professional, you're getting professional advice. And I think nowadays, people are emotional when they buy houses. And I always say you buy a house with your heart, then you back it up with your head. These decisions can also be applied when you're thinking about renting a house. Are you really buying it emotionally just to, I don't want to pay these fees, but then in the long run, you are paying way more than what you're making in the end of the day. So please contact us. We love to earn your business and trust. We also have 5 open houses this weekend. 4 are in Parkland. 1 is in Pembroke Pines. All the information is on our website, our open house page, on our Parrot real estate website, parrotrealtyfl.com. You can go visit that and click open houses and see all the information. We also are having our charity coming up, our Parrot Giving Day charity. We love this charity. Please see a lot of the marketing. We're putting it up in the video from last year. It's a great way to give back to our community. SOS Children's Village, one of the really exciting charities that keeps siblings together when they're taken out of a house into a foster system. There's a village in Coconut Creek. It's right around the corner from us, on Lyons and the Sawgrass, in the Winston Park area. And it's fantastic to be able to give back to that community. We're raising money. If you go to our website, our GoFundMe page, we're trying to raise. Last year we're under $8,000, and our goal is to try to raise $10,000. Parrot Realty is sponsoring and donating for the event itself the whole day. We're at Chick-fil-A trucks. We're going to have bounce houses and rock climbing for the kids, a full day of lunch, and games and exciting things for all the ages of the foster kids. And then the donation that you would be giving to us through the GoFundMe page is to allow the kids to have a holiday. We take for granted our Thanksgivings and our Christmases and Hanukkahs and Kwanzas and celebrating the holiday spirit. These kids don't have the kind of holiday you're going to have. And we're trying to implement with this charitable donation. We're asking to be able to change these kids' lives for the holiday month. So please give all you can. And if you give a little bit, it all adds up. And we would love to be able to give those kids extra special gifts and to go on field trips and to be able to have, different events that they can coordinate with the heads up at the charity. So please, thank you so much for watching our show. I hope this was very informative, and share our posts again, and, get involved. Obviously I think everybody wants to be a leader in the community, and this is a great way to give back. So we appreciate the sponsorship and your support. So thank you so much. And we'll see you next week for another